Hi everybody, welcome to a new episode of the Reinvent Money Show with me, Paul Buitink, and my co-host Richard van der Linde. Our guest today is Matthew Slater of matslats.net. He's a full-time community currency engineer at Community Forge. He's a co-author of white paper Credit Commons and also co-creator of a massive open online course, a MOOC, called Money and Society. Hi Matt, welcome.
Hello.
It's great to have you on finally because we've been following each other for some time now on Twitter. And local currencies and mutual credit systems, something you're specialized in, have definitely been a bit underreported on this channel. And so it's good to learn a bit more about your work and the purpose of mutual credit systems and the power of local currencies and share that with our audience. So to start, could you tell us a little bit more about your biography? Who are you and how have you become a monetary activist?
Well, I always had a concern for the poor, shall we say, but I didn't really know what to do about it till I was about 33 and I had a year off in India to think about it. And then I started volunteering for an NGO and learning PHP, and also I joined my local Let's in Cambridge, and I noticed that their software situation was pretty backwards. That was in 2003. And eventually, in about 2008, I finished with the NGO I was working with, and by then I lived in Geneva. And I found this platform, a content management framework called Drupal, which was ideal for writing the software I wanted to write for the Let's. And so I started work on that and worked with a network of French Let's so that they would gradually adopt it. And so that was the beginning of Community Forge.
Could you briefly explain what a Let's is for the viewers that have never heard of Let's?
Yes, so Let's is a local exchange trading system. They began in Canada in the late 80s. And the key word there is exchange, because it's all about what we, the members of the community, can do for each other. And so they have an unusual kind of accounting system, but it's very, very simple and elementary and easy to understand. And that's called a mutual credit. And it means that you keep a ledger that says what everybody gives to everybody else in terms of arbitrary units. So you could use hours like a time bank, or you could use cams like they use in Cambridge, or bricks like in Brixton, but it's just a unit of account. And you don't have to have any before you can spend it. So you're making a payment like writing a check or issuing a promise, and that means your balance goes down and somebody else's balance goes up. And so all the balances in the system at any given time add up to zero. And then when everyone has given as much as they've received, everyone's balance is zero, and the system could theoretically close. Does that make sense?
Yeah, it makes sense to me, and I think it's also very clear to the audience. So you were traveling, at some point you saw the light and came to the conclusion that the use of Let's would actually help alleviate the poor, or could you continue that story?
Well, I was looking for a role in life, and I noticed that Let's are very interesting. They were toying with money, and I liked the feeling of it, and I thought it was something worth exploring. But it was only after I got involved in Let's that I learned more about what money is and why mutual credit systems could play a really important role in reinventing the economy and transitioning it to a post-carbon economy or a post-2008 recession economy.
Right, and then you learned how to write software, and then you wrote your own software that allows communities to start their own trade credit system.
Well, I started writing software in the late 90s when I needed a career, because I got this theology degree in the first place, which was no good at all. So I realized that software would allow me to make choices later on, and that's what I did. So then I was able to repurpose my software skills to focus on Drupal and giving every community its own platform. because I had also resilience in mind. If you want communities to be resilient, that means they have to manage their own software, maybe host their own software. And so there are other services providing similar functionality to mine. One of them is called CES, another one called Time and Talents. But all of them host your software for you as part of a single application on their server. So you can never really have it. You can have the data, but you can't really run the software yourself. So the Drupal approach was, it had this resilience in mind, and many of the Let's communities turned out to like that. More, for example, than the time banks, where all the national time banks tend to work under one umbrella, and they receive a single instance of the software. And so they don't have to take any responsibility for it, and they can get on with managing the community. A bit of politics there for you.
And since your work and solutions are focused on Let's, on local communities that have transactions with each other, does it also mean that you have a feeling that one of the big problems we have right now is that our currency areas are too big?
Well, yes, of course, the euro is a massive step in the wrong direction if you believe in localization and all of the message of transition towns that goes with that. I've become more nuanced since 2008, and I recognize now that there are uses for global currencies just as there are uses for local currencies, but local currencies hardly exist. They have no power compared to how the currencies like the euro and the dollar have been empowered through the globalization movement. So what I'm doing is saying, why don't we have local currencies as well? Why don't we give them more power? Why don't we invest belief in those?
Right. And they would then coexist next to the global currencies.
Yes, and each would have its own usage. So, for example, food should be grown locally and consumed locally, whereas iPhones, perhaps it's good that they're all manufactured in one economic zone. It's obviously not very resilient, but it's quite efficient.
Yeah.
And so we need a global currency to pay for the iPhones, and it probably needs to be a valuable commodity-like currency to pay for the iPhones. But with food, it's much more about exchange. So everyone can play a role in growing the food because it's local, and then everyone plays a role in eating the food. And so currencies for exchange are very different to currencies for long-distance trade.
Right.
But would there not be a problem that if someone can choose between a local currency and a global currency, and especially when a global currency is more commodity-like, that one and automatically, if one wants to preserve purchasing power, would choose for the global currency instead of the local one? Also, like because of network effects and winner takes all dynamics.
Well, the global and commodity currencies are much better for preserving purchasing power. They serve the store of value function because their value is much more universally acknowledged. But at the same time, you might find it hard to buy food with those currencies, and you might find it hard to earn those currencies if all the food is being grown and sold on local markets. And if you're in a recession and those currencies are hard to get, then you can't get jobs. So local currencies provide a whole other economy in that respect.
Wouldn't the local grower, if a local grower can, or seller of food can choose between the local currency and the global currency, wouldn't it also prefer the global currency and therefore offer in both currencies their price? I, for one, would prefer receiving the currency that is of more use globally than receiving the local currency, even as a local producer of food.
There's an advantage to a mutual credit currency, which we haven't covered yet, and that is that if you want to hold and spend a global currency, you have to earn it first because it's valuable. And if you want to spend in a local currency, or especially a mutual credit currency, you can spend it before you earn it. You get interest-free credit in these systems. So that would be one reason for preferring it. But also remember that most of the money that passes through your hands isn't for long-term storage. You don't need to have a valuable currency if you're just going to earn it one day and spend it the next. And so there are reasons for using these worthless currencies because they're so much more easy to create, and we can therefore have them in the appropriate quantity that the economy needs. If you have a valuable, scarce currency and there isn't enough of it, what do you do?
Yeah, prices would adjust.
Well, then the price of it would go up. It wouldn't make it any easier to obtain.
And could you tell us a bit more about how the creation of that currency works? So, because it's a zero-sum game, everyone you get pluses and minuses, and it evens out to zero. So, if I, for example, I join the system, the local currency system, and I want to purchase something, but I have no balance, so I go into the red. Are there limits to how much you can spend without having provided services yourself?
Yeah, first of all, we don't call it the red because at any time half the people are under zero and half the people are over zero, and there's no moral penalty for being below zero. It's just how the system works. There's no credit without debit. So sure, you want to restrict the amount by which people can go negative, because if they go negative, that means they're receiving things from the system without giving back. At the same time, you want to restrict the amount that people can go positive, because that means they're giving things to the system and not receiving back, which is a very similar kind of injustice. And both of those extreme situations throw the system off balance. So an exchange system is about giving and receiving in equal quantity. And so you have limits, minimum and maximum limits, that prevent people from getting too far away from equilibrium. And then, of course, those limits can be negotiated according to whoever's circumstances. You know, someone has a special need. I was in Crete the other day, and they were saying, what if there's a farmer and the only help he needs is in the harvest, and that's all together in 1 year? So you would, that's all together at the same time of the year. So you would give that farmer a good big limit so that he could spend everything all at once. Earn everything all. He could do the harvest all at once, and then he could spend throughout the year.
Yeah, that's very common also in the traditional finance, of course, to provide seasonal credits or seasonal limits. So that makes a lot of sense.
There's a lot of things in common between the things I'm talking about and conventional finance. The main difference being that in mutual credit systems, the unit of account is worth nothing, and that changes quite a few things.
I'm wondering, who's the authority that determines the creditworthiness of the people who are involved? So say I'm part of this community. My harvest might be at the end of the year, so I would be running a tab for the coming months. Who checks my background to see if I'm creditworthy and will eventually repay? Because like in the normal economy, the national or global economy, you have the counterparties who are specialized in that, like banks. Would it be some party with a similar function within a local exchange community, or would it be a standard limit for everybody?
That's a good question, but ask yourself first, who is taking the risk of your having a lot of credit and then dying unexpectedly?
In a normal case, it would be the shareholders of the bank, eventually the depositors at the bank. I mean, in the ideal world, right? So without a world without any bailout.
Well, I haven't mentioned the bank yet. When you issue credit in a mutual credit system, it's really all the other members of the community who are agreeing to honor that credit. And so the process of deciding how much credit can be issued really belongs with them. And so there needs to be a community governance process. And of course they might delegate it to specialists, but the decision has to come back to everybody.
So it's a bit like a credit union in that sense.
I don't know how credit unions are governed.
Yeah, well, they're also as a whole, the members, probably through voting or through proxy, they can decide on the credit limit policy of that union.
Okay, well then it's like that.
Yeah. And who decides on the unit of account? That always has confused me a bit, because time banks, of course, they work with time. But if I produce something, there's not only time involved, but also materials, for example. How do you guys go about setting the right unit of account?
Well, the mutual credit systems tend to fall into two different camps, according to whether they use time or whether they use something else. And that's decided, of course, at the start of the system. The ones who use something else are trying to get away from the idea of the national unit of account being the measure of all things. And so they tend to describe the value of the unit of account in rather woolly terms. And they might relate it to an ideal national minimum wage, and they might indicate as well its value in time. And then they'll let people find their own prices. That's a cultural thing. In fact, for the purpose of having universal exchange, there's nothing really wrong with using the national unit of account. And that's what the business barter systems do as well. Did I forget to mention business barter systems? There's a whole industry doing exactly what I'm talking about. It's just that I'm focused on local communities and transition and commons. So the business barter industry doesn't feature very widely in what I talk about, but they're doing exactly the same thing, and they use the national unit of account for convenience and for pricing.
Which means that if you have a problem in the national currency system, it also is reflected in your local system. For example, if there's a lot of inflation or deflation, it transfers also to the local system then.
Yeah, but in a local system, at least you have the freedom to adjust it or to switch to something else. Some people have wanted very much to design their own unit of account for that purpose, but while we're in minimal deflation, it doesn't seem a lot of point compared to the inconvenience, at least for businesses. In time banks, of course, it's different. In time banks, they're not even thinking about those hours in terms of money or of their economic benefit.
Yeah. I was also wondering about the upper limit of a positive balance within the LEDs. Basically, that means that you would not allow the concentration of money. So you want people to spend the money actually within the system. But that also means that they could, I don't know, concentrate the assets at one place at some point. So they could collect assets instead of collect money. Would it be preferable to have people who have a lot of assets instead of having a lot of money?
Absolutely. One of the problems with money is that it's so easy to accumulate, and you barely even have to pay any storage charge. And so there's no limit really on how rich people can get in money. But if they had to store something in assets, that might make it a little more preferable to spend the money and spend the assets and get them going around the economy so they could be more shared.
All right.
So this, again, when we talk about exchange systems, that means this is not for accumulation. There's no interest involved. This is a convenience that allows you to exchange goods and services with your economic peers. If you want to accumulate, use something else, because the exchange system will break if too many people start accumulating both credit and debt.
So it requires a different mindset from the people who are involved in the system. So it requires some screening to have a system with people who actually cooperate in a sense.
I'm not sure screening is quite the right thing, but yes, the users need to understand that unlike conventional money, there's no point accumulating community credit. It doesn't yield interest, and it throws the system out of kilter. The point is, it's exchange, you give as much as you receive. If you have a large balance, you should spend it. If you have a large negative balance, you should earn it back.
Yeah.
You know, but at your convenience.
But it would be possible for someone to accumulate to a certain extent and provide loans to other members, or would you ban those types of transactions? Because someone could lend out some balance possibly and get some interest in return, maybe even under the table without you guys knowing, but you can come up with some sort of agreements like that, right? I'm not saying there will be loan sharks instantly, but how do you
quasi spending?
How do you cope with that potential risk?
If the community decides that it doesn't think you're creditworthy, or the need is not great enough, and you're not worthy of charity, and you're desperate to spend, then yes, you could go to another member and ask for an off-the-books loan, and they could charge interest for it. There's nothing in the system, in these systems, that prevent that kind of informal activity, and indeed in a free market it would be just fine as well.
You're not against that per se. It's not that you're ethically against it.
You would go to the community first to ask for the credit, and you would explain why you could pay it back. And if the community isn't convinced that you could pay it back, then why would a loan shark be convinced that you could pay it back?
Well, maybe it's the purpose of the loan is that, for example, if I'm a part of the community, I already have a big TV at home, and I want to have a second TV, and the community thinks, well, you're already in the negative a lot. I don't think you should have another TV. First, start earning some points. And the loan shark could think, well, I trust this guy. He will eventually pay back, so let's just give him a loan for 10% a year. It's not something you're against per se, ethically, or.
No, that's just private enterprise as far as I'm concerned. It's not that I support loan sharking, it's just that it's off the books and it doesn't affect the design of the money.
Right, because in monetary reform circles, of course, there are a lot of also people that are very, very much against the very concept of interest, and interest is like a no-go in any case. But you say, okay, if the free market happens to derive to these conclusions in certain circumstances, then you're okay with that.
Well, I'm not in the business of policing people about who they trust and how much they charge for the trust. I'm in the business of making it easy to issue credit to each other.
Right. And I mean, for the people who are already familiar with your work, this won't be something new. But for the people who are getting to know you, you're also working on exchanges between different communities, right? Could you tell us something about the work you're doing on that front?
Well, most of these mutual credit systems, and maybe the reason why you haven't heard of them, is that they're very small, and many have existed for more than 20 years, but they never get beyond a certain threshold of maybe 100, 150 people. And many people would like them to grow, but they have great difficulty involving enough people at the same time that there's a useful variety of goods and services in the marketplace. So all of these communities, they have the accounting, which I've talked about already, but then they also have a list of everything everybody's offering to the community and everything they want as well. So that's to help facilitate the exchange, and the website handles all of that. But very often, you know, if you've only got 10 or 20 people active in one of these communities, it's very difficult to spend or earn. And so one possible solution to that problem is to make the communities more interoperable. So if you can't find an earning opportunity in your direct community, maybe you can hop across to the next suburb and there's somebody there who is looking for your skills. So there's the issue there of being able to look in the directory of the neighboring community, and then there's the other issue of being able to make a payment between communities. And so I'm talking a lot these days about the notion of the credit commons, which would be a protocol that would enable payments to be made across community borders.
Right. And could you say that it is quite similar to currencies as we know them, where you also have the difficulty of exchanges, that you need a different bank account in the other region, that you need to swap currencies for other trades? Is that quite similar? The problem that
Yes, it's exactly the same problem.
Yeah. Right.
But in the credit currencies, you think about it a little bit differently, because you're not thinking in terms of moving a commodity from one place to another and buying and selling and translating it. You're thinking in terms of converting a debt from your local currency into another community, and the idea that that debt must come back at some other time. So everything is reciprocated. It can be reciprocated multilaterally, of course. So just as in a local currency system, I can get all my goods and services from one person and then earn the credit from another person. So in between communities, you could be spending all with one community and earning with another community, because it's multilateral.
Right, but then you would get the trade balances, that one community holds the money from another community, and eventually you want to balance that out. Is that part of that scheme as well?
Yes, because it's all about exchange.
Right.
If you look at the trade balance between the United States and China, you'll see that's not about exchange. It's very different, and it gives a massive power imbalance between the two. So one of them is producing everything and the other one is consuming everything. But because one of them has the ability to issue dollars, then that's all right. No, I don't think it is all right.
And that also means that you would have to keep track of the value of each community currency, the size, or the amount of that currency that is outstanding, and you would also have exchange rates, right? Then that you would have to deal with. Is that something the platform would deal with, or is that on the individuals to solve?
Oh, well, if a group gets a severe trade imbalance, then you have to work at the political level to rectify the imbalance. It's no longer a matter for individuals. And so when groups try to rectify balances, they might do things like start a local business or agree to change suppliers.
Okay. Yeah.
We haven't got a lot of experience of that because the whole thing is very much in its infancy. So I'm projecting forward a lot here.
Yeah. So you're not projecting a market per se to deal with the exchange rates then?
I have different ideas about exchange rates, again, because it's not a commodity and because it's being done in a spirit of solidarity. I'm aiming the whole credit commons towards the solidarity economy, not towards the make as much as you can economy. Because it's done in a spirit of solidarity, exchange rates can be negotiated much more than bargained. They can be more stable, and they can be adjusted to meet the needs of everybody concerned, not just the community that owns them. But of course, the community that owns them should have the first say on what their own exchange rate is.
Yeah.
And Matt, do you have some examples of how this works in practice right now? Because the software exists, there are already several LEDs trading with each other. Did it already lead to some imbalances, and how did they work it out? Or what's your experience so far with this inter-community exchange?
There's only one system that does it at the moment, called CES, Community Exchange Systems, based in South Africa. They've got several hundred registered exchanges and a fair bit of trade going on between them. They don't, however, because the software is just so much trouble, they haven't implemented a strict balance limit policy on that. And so they have run into some difficulties with some communities, say countryside communities, spending in the town and then not being able to balance. Actually, I heard of another example as well in Austria where the same thing happened, and the two communities came to an agreement, and they said, let's all take a holiday in the countryside. So they hired a bus and they took everybody out of the city system into the countryside, spent the weekend or something, and they balanced all their credit, and then came back again and got on with it.
So that's a practical example of how you just said that's on a political level or a societal level you come to an agreement to, to make sure you make the balance whole. Okay, yeah, interesting.
It's very rare because the levels of governance required to do that aren't in place yet. Most of the movement is still very local, fragmented groups thinking locally, but sharing software.
And in Holland we have, of course, Henk van Arkel. I think he's famous across the world, and he's even wearing the same bandana as you are. But his software, Cyclos, I think, is also available across the world, even in open source form, and is also used by a lot of communities. Is that software not also interoperable between the communities?
The idea of the Credit Commons is to make that protocol so that it can be interoperable. It's pretty easy to make software interoperable with itself, but I didn't find that very useful. So first of all, just to clarify about Cyclos, it's only version 3 which you can say is open source. Version 4 is partly closed, and they're going more in that direction of closing it off for funding reasons. Cyclos does have an issue, Cyclos Communities, which enables you to host several groups on one server, and that enables intertrading between them. But I haven't looked at it very closely. I don't know how it manages balance limits, and I doubt very much that it manages the governance of the balance limits between the communities. And so the Credit Commons protocol is handling both the accounting and the governance. It includes ways that groups can register their decisions, especially about the balance limits.
Okay, and then earlier you also talked about resilience, and you said the difference between some of these existing software and what you've built is that yours is just in a browser, and you don't, so users can easily create their own community. But then still it's on some server somewhere. So then, and now we also have blockchain, for example, in Bitcoin, where people have a copy of the database on their own machine, or you can at least duplicate the database, and you're more resilient in that way. Are you also looking into Bitcoin and blockchain technology to further your interests?
So two things there, one about resilience and the other one about am I looking to the blockchain. First of all, resilience is a very complex thing, and it means many different things, and the idea that a community might be able to install and run its own software on its own server doesn't in any way reduce that community's dependence on the internet or on whoever owns the server or on the long-term author of the software. So it's just a small point of resilience, but it was something I was focused on more especially in 2009. Secondly, the blockchain, it seems to me the right approach to the Credit Commons. I would like the Credit Commons to be implemented as a blockchain, because that way you don't have any problems about the custody or the integrity of the data.
Yeah. But then you would possibly run into the same scalability issues that the Bitcoin blockchain has, although in your world you probably have all sorts of different blockchains then that communicate a bit like sidechains, which you already said earlier. So perhaps the
Well,
scalability...
actually, I'm looking more at Ethereum, which is designed to be pretty scalable already. It's the blockchain of choice at the moment.
Yeah. Okay, interesting. And how do you look at the euro? You travel a lot, so I don't think you have a home, right? You kind of live also from the commons in a way. But perhaps you can say a bit more about your personal circumstances. But first, what do you think of the euro, and do you think it should die or it should survive? In which form?
Well, it's my understanding that the euro was terribly designed from the beginning. It was bound to fail, and it's failed in exactly that way. So, yeah, the sooner it goes, the better. But it will be painful, damaging
with
for
flaws in the
economies.
design, you mean? Could you elaborate on that?
Why it would be painful? Well, any currency collapse is going to be painful, but sometimes you want things to happen sooner rather than later, because if it's later, it's going to be even more painful. That assumes, of course, a sudden collapse. A gradual collapse, as you might say we're experiencing now with deflation. Is that more painful or less painful? What if we have 20 years of deflation compared to 1 year of crash? I don't know. What I wish for the euro is neither here nor there anyway, because I'm only me. I try to use currencies like that as little as possible, and I live in such a way as to minimize that. So while I'm flying around a lot, it still works out at less than most people pay in rent. And then I'm eating other people's food and sleeping in other people's beds, and no money's changing hands. Generally, wherever I go, I'll offer some software help, and people will be happy to support me in what I'm doing in writing software for the whole movement. So that's how I get by.
Yeah. So eventually we end up with a barter economy, at last.
I don't know. I'm just trying to show that it's possible, at least for somebody somewhere. It would be much harder if I had children or if I was ill.
Yeah.
But while I'm healthy, strong, and single, it's quite a fun way to live. These things become much, much easier as more people do them. I'm not sure that more people are doing them necessarily. Monetary reform is really something for the whole community to get involved with, whether that community is your village or your co-working space or your country or your continent. It's a collective effort. Money is an agreement that we all make together. So anything I do unilaterally isn't going to be very powerful, at least economically or sociologically speaking, but it does serve as a statement.
Well, maybe Adam Smith's fantasy world of barter will eventually then come to fruition in real life.
It would be much healthier in some respects.
Well, we'll see. But let's also talk a little bit about your MOOC, because you created a course online, and tell the viewers a little bit about that and where they can find it and how they can participate.
Well, I spent all this time writing software for local communities to exchange between themselves and between each other. But not many local communities have a very strong sense of their own identity or their own economy. And not many people seem to understand the value of exchange systems or even how money works. And so my software work has a very narrow appeal, and I wanted to educate a lot more people about how money really works and to get them thinking for themselves what might be effective in changing the money system, and whether that means making a personal transformation or directing their career in a particular direction. That's not for me to say. So I wanted to get a lot of things off my chest about the nature of money. So working with my good friend, Professor Jem Bendel, we put together this massive online open course, which is 4 weeks, 4 hours each week, and a detailed presentation which covers monetary theory in week 1, monetary history in week 2, money and society in week 3, and then looking at alternatives in week 4. And so it's a master's level course, and we've had really tremendous feedback from the people that have done it, because people aren't really discussing money very often in a way that's both radical and intellectual. And so I put together all of my reading and a bit of my own spin, and then we've added lots of academic references, because this is a university course after all, and come up with something that I think is very special. And we're just about to do the 4th iteration in about 2 weeks. 21st of August, the 4th iteration starts. We've had 1,000 people pass through, about 200 people have completed it, and we've got 150 or so lined up this time.
Wow.
Impressive. And where can people enroll or find out more?
Well, you can put the link in the show notes, but if you Google IFLAS MOOC, that's IFLAS, or look for the Money and Society MOOC, you'll find the page that talks about it.
Yeah, I'll put it in the show notes. Yeah.
Thank you.
Well, thanks, Matt. Maybe Richard, do you have some final questions from your end?
Well, I hope it doesn't reveal too much of my nature or say too much about it or create an opinion. But I was just there's one last question about the LEDs. So say we have this network of different LEDs tied together, working well. I mean, if we look at the history of the humans, then at some point there's always a defector, so to say, in a system. Is the system resilient enough to encounter that and to live on? Is there a protocol for that? If there's like one group that is defective?
Is resilient. It's a question of insurance and managing risk. So if you want to run a zero balance system and make sure that every account closes on zero balance, you need to keep a reserve or have a mechanism to get the accounts which close prematurely back to zero. In practice, at the moment, many of those accounts that close prematurely have a very high positive balance, so it's very easy to maybe offset that positive balance against other negative balances. But maybe as it moves towards the real world, you would want to frame it more like insurance and run a transaction tax or something, so that you can be sure always to get accounts back to zero and know that the system is balanced.
Right.
Make sense?
Yeah, perfectly. Thank you very much.
Matt, maybe
what do you think about mutual credit systems as a bottom-up approach to monetary reform? Have I made the case at all, or does it seem still a bit somewhat obscure, maybe not very monetary? And do you think perhaps monetary reform really needs to be done through the government by changing the law?
Well, like I had an interesting discussion with someone from the Dutch positive money movement, and in a way he says that if you want to change something through the government using democracy, then it's also a form of bottom-up reform, right? Because the people vote for a certain change, so the vote comes from the bottom and then leads to a change from the top. So I guess lots of it is semantics in a way, and also you could argue Bitcoin has been created by some developers with this grand vision of making the world a better place. So also in that sense, coming from the bottom. Eventually, everything comes from humans and has, of course, global implications sometimes. But So this, for me, it's difficult to really understand the difference between what's bottom up and what's top down, following these lines of
Well, I
reasoning.
mean, taking monetary action by changing our spending habits and consciously trading with our neighbors and using our own unit of account for doing that. So creating our own unit of account rather than asking the government to do something different.
Yeah, that is,
So
that
you
is
could
for sure.
call it
Yeah.
activism rather than politics.
Yeah.
Yeah. What do you see? What's your view, Richard, on that?
Well, yeah, for me, I mean, this is all about trust, right? So the closer the people are to you, the easier it is to trust them. So if you have like all these personal realms where you trade and where you might have different currencies and eventually you can actually swap those currencies, in a sense, it actually does make sense and it is appealing. And so for me, I'm quite agnostic, but that's only, you know, one personal opinion. But I'm really curious to see what it will bring in terms of new information about how we can actually coexist, because that is kind of the challenge we have as human species. So I'm really happy to see all of your work, Matthew, and also the other LEDs and local communities and mutual credit systems. I think it is a positive development for sure. And who knows? You know, we might find out that it's not for us, that it's not working in line with our nature. But I mean, there's a big chance that it actually will. So in that sense, I can only say that I encourage what you're doing, and I hope for you to be really successful. And yeah, I think you definitely made a case today. So
Yeah,
thank you for that. Yeah.
Okay, thank you.
Yeah.
Right. Well, thanks, Matthew, for being on the show, and I'll put links to your blog and to the MOOC and the white paper in the show notes. And it'd be nice to see you one day, and whenever there's a monetary event or something going on. I've lived in the UK. I've traveled there a lot. I've also lived in Brixton, where you have the Brixton pound. So good luck with everything, and drop us a line when you're in Amsterdam, because you travel so much. So when you're in Amsterdam, let us know when we can meet up and maybe try one of the local systems there.
I'm there from time to time.
Great. Well, have a good day, and keep in touch.
Thanks very
Thank you very
much.
much.
Bye, Matt.